This is a follow-up video to the previous Basics of Employees Tax video, in which we will look at an example. In this example, we have the following information. You have Solomon, who is 32 years old and unmarried. He had the following or the below income and expenses for the month of December 2021. He is employed by SASSA Consultants as a manager. There is a salary there of 40,400. There's travel allowance of 5,000. Before we get to travel allowance, in terms of the salary, there's a note 3. When we go to note 3, it says that Solomon's salary was increased by 800 Rand per month on 1 December 2021. This pay increase was backdated to 1 August 2021. His salary received from 1 August was therefore also increased with 800 per month. He received this backdated total amount for the months of August to December in December. And then when we go back to our information, we have travel allowance of 5,000. We have a Christmas bonus of 50,000. We have pension contributions of 3,600, and then with that we have note 4. If we go to note 4, it says that Solomon belongs to his employer's pension fund. He contributed 3,600 to the pension fund during December, and his employer contributed an equal amount. Then we go back to our information on the table. The retirement annuity contributions, it's 600, and that is in terms of, or there's a note, and that is note 5. When we go to note 5, they say that Solomon makes retirement annuity fund contributions of 600 per month. He has not informed his employer of these contributions. Right, going back to our information on the table, we have payment to the bank for bond, that is 2,000, and it refers us to note 6. When we go to note 6, Solomon has an agreement with his employer that they will deduct 2,000 from his salary each month and pay it directly into his home loan account. The next line item in terms of our table is a payment to the trade union, and that is 150. Remember, these amounts on the right hand side of the table is your monthly amounts. Right, so we have a trade union payment there of 150 rands, and then the last line item in our table is medical fund contributions of 3,215, and that refers us to note 7. When we go to note 7, and then it says Solomon contributes 3,215 rands to a medical aid fund each month. His employer contributes 2,000 per month to the fund. During December 2021, he visited the doctor once and had to pay a levy of 300, which was not covered by his medical aid. His prescribed medicines amounted to 800, of which the medical aid paid 730 rands. Right. We have 2 notes in terms of the additional notes that we do not look at. And that is note 1. It says that at the end of December 2021, Solomon is entitled to 5 days leave. He needs to take this leave before the end of March 2022. If he does not take the leave by then, SASSA Consultants will pay him out 1,600 for 5 days, which will amount to 8,000 on the 31st of March 2022. The second note that we do not read is note 2. In terms of this note, in January 2021, Solomon was granted a bursary of 25,000 to study. Unfortunately, due to circumstances during the year, Solomon did not complete his studies and informed SASSA Consulting on the 1st of December 2021. Solomon will have to repay the amount over the following 12 months period starting 31 January 2022. Assume that the official rate of interest was 7.75% at all times. He did not make a repayment in December 2021. In terms of what we are required to do, we are required to calculate the amount of employees' tax to be withheld by SASSA consultants from Solomon's remuneration for December 2021. Before we get into what is required, let us note the information that should have stood out from the information provided. The taxpayer is younger than 65. This means that if we are to take into account medical credits, we will only look at 6A medical credits and not 6B credits. The income and expenses provided were not annual equivalent amounts, and therefore we would need to calculate the annual equivalent of the balance of the remuneration. Remember, as I said when we read through the scenario, that these amounts are monthly amounts. The Christmas bonus, that 50,000 over there, is an annual amount which should not be included in the monthly remuneration calculation. Note 1 is an indication of variable remuneration, which is taxable in the month in which it is paid. So also, this is something that does not happen each and every month, so you will have to take that into consideration in your calculation. The fact that Solomon will be repaying the bursary amount with no interest should get you to thinking about the provision of an interest-free loan to an employee, which is a taxable fringe benefit and therefore remuneration. The backdated salary is a variable amount which should not be included in the monthly remuneration. So similar to the leave pay, this is a variable amount, which means when you do your monthly calculation, you should not include this amount in the monthly calculations because it's not a payment that occurs each and every month. Solomon contributed to a pension fund, and this is an allowable deduction that should be considered when you do your balance of remuneration. His employer also contributed towards his pension fund on his behalf, which is a taxable fringe benefit. Therefore, it means you would need to include that benefit in remuneration. Solomon has not informed his employer of his retirement annuity contributions. Therefore, his contributions will not be considered as a deduction in his employee's tax calculation. Solomon has not informed his employer of his retirement annuity fund contributions, and therefore his contributions will not be considered as a deduction in his employee's tax calculation. The employer contributions to Solomon's medical aid fund will be remuneration as they are a taxable fringe benefit. So when you do your calculation of remuneration, you will need to include the contributions to the medical aid by the employer in remuneration, as that is a taxable fringe benefit. On an overall analysis of the information provided, as we have annual and variable amounts in our scenario, it means we will need to perform two calculations to get to the employee's tax to be withheld for the month of December 2021. Remember, in that month, we had more than one type of remuneration that does not happen each and every month. So if we need to calculate employee's tax that needs to be withheld in that specific month, we will need to perform then two calculations. Right. So I've put the two screens here so that we can see the information that we need to look at for our example. Remember, when we looked at our information, we have found that we need to do two calculations, right? So the first calculation will be all the amounts that are really monthly amounts and which are not just annual amounts or variable amounts. So let's look at our first calculation. This first calculation will entail calculating the employee's tax on remuneration, excluding the annual amounts. We will need to look at the remuneration and deductions to get to our calculation. Now we need to look at what makes up our remuneration. So in terms of our information, we have there the salary, right? We have been given that amount, and that is that 40,000 over there, right? So our salary there is 40,400. We have then travel allowance of 5,000. So if we look at our information again, that 5,000 is below that 40,000 there, 40,400. Remember, in terms of the rules of remuneration or the definition of remuneration, it includes 80% of the travel allowance. Right. So at this point, we don't know how many kilometers are used for business purposes. So therefore, we cannot include 20% of the travel allowance. So we'll stick to the norm if we don't have the kilometers. So since we can't make the determination, we will take only 80% and include it in remuneration. Then the next line item would be the fringe benefit. Remember, that loan or that bursary that was provided in terms of note 2. So that information is over here. So this person was granted a bursary of 25,000 to study. Right? So they couldn't study further. So they will have to repay the amount, and they were charged interest they were not charged any interest, right? So they did not make a repayment in December. So it means they were given a loan at no interest. So that the fringe benefit then in this case would be that 25,000, the capital amount, times 7.75%. So that is the official rate of interest. And then you divide that by 12 months because we want to look at the monthly amount. Hence, we divide by 12 here. So we'll see then that the taxable benefit, the interest-free portion, is that 161 Rand over there. The next item then would be the pension fund contributions. So if we look at our information again, pension fund contributions of 3,600 made by the employer. Let's see where we have that amount. The pension fund contributions, those are here, that 3,600, right? The employer makes a contribution of the same amount, so that equal amount. Hence, the whole 3,600 would be included in remuneration over there and is fully taxable as a fringe benefit. The next line item then is our medical fund contributions. If we look at our information provided, you will see that the employer contributes 2,000 per month. Remember, our calculation is a monthly calculation, hence we will include that 2,000 over here in remuneration. The next step in our calculation is the balance of remuneration, and that is determined after taking into account the deductions. So we have our remuneration here. So this is our gross remuneration, which is 50,161. For us to get to our balance of remuneration, we will have to look at the allowable deductions. So let's look at that. Solomon made contributions to the pension fund, and therefore his contributions, as well as contributions made by the employer on his behalf, will be considered in the calculations as these are allowed deductions. So remember that 3,600 that we included in remuneration over here is deemed to be a contribution that was made by the taxpayer. Hence, we take their contribution as well as the employer's contribution, which comes up to a total contribution of 7,200. What I need you to take note of is to remember that the retirement contributions consist of both pension fund contributions, provident fund contributions, as well as retirement annuity contributions. So in our example, Solomon made contributions to both the pension as well as the retirement annuity fund contributions. So if we look at the retirement fund contributions, we will take a look at the pension as well as the retirement, right? Now, if we now look at the retirement, we see that no amount should be deducted. And the reason for that is, remember in our previous basics of remuneration or employees tax, what we had said is the retirement annuity will be allowed as a deduction only if the employee has furnished proof to the employer that they are making contributions towards a retirement annuity fund. So if we then look at note 5, it says that Solomon makes retirement annuity fund contributions, but he has not informed his employer of these contributions. Remember, when the employer deducts or makes their calculation of employees' tax, if they are not aware of this information, they will obviously not take it into consideration. Hence, we have then an amount of nil there because they are not aware of this information and therefore they cannot use it. What you need to take a note of is that these rules are only applicable to employees' tax. Now, this does not mean that when you make or when you consider your taxable income, if you are required, for example, to calculate taxable income, for purposes of the Section 11F retirement contributions deduction, you would include these contributions made by Solomon in that calculation. Remember, there's a difference between employees' tax deductions versus your normal tax deductions, which Section 11F, capital letter F, is a special deduction. So please don't be confused by those two. Right. So now if we look at the total contributions, then those are made up of the 7,200, but it is limited to the lesser of 350,000, which is an annual amount, divide by 12, and that will come up to 29,167, or the second item, which is your remuneration. So where do we get this 50,000? It is the remuneration times 27.5%, which is 13,794. Right. So the limitation then is the lesser of these two amounts, which is the 13,794. Now, because the actual contributions, which is 7,200, are lesser than our limit then of 13,974, then it means that we can deduct the full amount of 7,200. The payment of the home loan as well as the trade union are not allowed as a deduction for employees' tax purposes, resulting in the monthly balance of remuneration of 42,961. So if you look at the allowable deductions for employees' tax purposes, the payment of a home loan as well as the payment to a trade union are not one of those deductions. Now, since we have calculated our balance of remuneration, remember this is the monthly balance of remuneration. The next step is to convert the monthly balance of remuneration to an annual equivalent balance of remuneration. And we will do that by multiplying the 42,961 by 12 months. And we will get to an annual balance of remuneration of 515,532. The normal tax on this amount then, using the 2022 year of assessment tax tables, is 128,031 rands. The primary rebate is 15,714. Remember, the taxpayer is 32 years old, therefore they qualify for the primary rebate alone, right? And then they have made contributions to a medical aid fund, so we will take into account your Section 6A credits, that is the 332 rands per month, multiply that by 12 months, and we'll get to an amount of 3,984. Remember, the taxpayer is younger than 65, so therefore we will not take into account your Section 6B credits for your additional medical expenses, so that will not be considered in our employees' tax calculation. Therefore, then we will need to move on to the next step. Then we will have to take the sum or the difference of the normal tax of 128,031 less the primary rebate less the 6A credits, which gives us an amount of 108,333, and then divide that amount by 12 months. Remember, this is the yearly tax. So for us to get, remember what we are required to do is to calculate the tax for the month. So for us to get this figure to a monthly amount, we'll need to divide by 12, and then we'll get to an amount of 9,028. Now remember, we needed to do two calculations. The one calculation on the amounts that are the same each and every month, so your monthly calculation, and then we need to do the second calculation for the variable amount or the annual amount. Right, remember we had an annual equivalent remuneration of 42,961. We multiply that by 12 and we will get to an annual balance of remuneration of 515,532. So that is from the previous slide, right? And then we have leave pay, which is variable remuneration, which accrues on date of payment. If we look at our note relating to leave pay, so our note relating to leave pay is that at the end of December 2021, Solomon is entitled to leave days. He needs to take leave before the end of March 2022. If he does not take it, then the company will pay him out an amount of 8,000 on 31 March 2022. So this will be paid on 31 March 2022. Remember, our calculation relates to 31 December 2021. So hence, remember, in terms of Section 7, capital letter B, an amount which is variable will be included in remuneration in the month on which it is paid. So if this amount is only going to be paid on the 31st of March 2022, then it means we will consider it for employees' tax purposes when we do the calculation for March 2022. So it does not affect our calculation for December. Hence, we have then an amount of nil there. The backdated pay, that amount of 800 times 5 will be included in remuneration. So let's look at the note relating to the backdated pay. Right. So if we look at the note relating to the backdated pay, he received his backdated pay amount in December. Hence, we included, although it is variable, we included in the month in which it was paid. So that is in December. Right. And then we had a bonus that was also paid in December. If you look at the information provided, the bonus was paid in December of 50,000, and then we have the annual balance of remuneration, including variable as well as annual amounts of 569,532. Right, the normal tax on that will be the 147,471 less the primary rebate, which is 15,714, and then the 6A credits, 3,984. That will give us an annual tax of 127,733 on the annual amount. For us to look then at the difference, to look at what is the amount of tax on the annual amount, we will take the difference between the tax on remuneration excluding annual amount, so that is our first calculation as well as the second calculation, right? And that amount of that difference of 19,440 will be the employee's tax on the annual amount. For us to get to the employee's tax on the employee's tax for December, we will take this employee's tax on the annual amount plus what we calculated in our first calculation, that monthly tax of 9,028 rands. The sum of these two amounts will give us employees' tax for the month of December amounting to 28,468. I hope this example helped you in applying the principles of employees' tax discussed in part 1 of 2 of the employees' tax videos. Thank you very much.